Nvidia, NVDA, shares plunged more than 5% on Tuesday, partially unwinding the gains from a 2-week rally and pulling back from a record-high close the day before. The drop came after a Bloomberg report indicated that the Biden administration may impose new restrictions on U.S. chip exports to certain countries, specifically targeting nations in the Persian Gulf over national security concerns. The report, citing unnamed sources, sent ripples through the semiconductor industry. In addition to Nvidia, stocks of fellow chipmakers Advanced Micro Devices, AMD, and Intel, INTC, also fell on the news. While Intel declined to comment on the report, Nvidia and AMD did not immediately respond to requests for comment. Adding to the sector's struggles on Tuesday was a disappointing earnings report from ASML, a key supplier of semiconductor manufacturing equipment. ASML, which supplies critical tools to chipmakers like TSMC and Intel, reported weaker than expected order bookings of $2.6 billion, $2.8 billion, falling far short of the $5.39 billion forecast by analysts tracked by Bloomberg. This dismal report further weighed on the broader chip sector. Nvidia's sharp decline on Tuesday partially erased gains from its recent surge, which had driven the stock to a new all-time high on Monday, with shares closing above $138, surpassing its previous June record of $135.58. Nvidia's rally has been fueled by skyrocketing demand for its AI chips and growing optimism about the future of artificial intelligence, bringing it close to surpassing Apple, AAPL, as the most valuable company on Wall Street. However, the stock has been volatile since its 10-for-1 stock split in June. Trade tensions surrounding AI chip exports have repeatedly put pressure on Nvidia shares. Similar to the current situation, Nvidia's stock saw a steep drop around this time last year when the Biden administration tightened export controls on U.S. chip makers. Despite this, Nvidia has continued its historic rally, with shares up 186% over the past year. Investors are increasingly concerned about geopolitical risks and potential slowing demand for AI chips, which have been a major growth driver for Nvidia. D. Davidson's analyst Gil Luria recently noted that AI-related spending by major tech companies could begin to taper off as soon as 2025, posing a potential threat to Nvidia's future growth. Nvidia is set to report its quarterly earnings on November 19th, with Wall Street analysts projecting a substantial 82% year-over-year revenue increase to $33 billion according to Bloomberg consensus estimates. Despite recent volatility, around 90% of analysts, tracked by Bloomberg, still recommend buying Nvidia shares, reflecting continued bullish sentiment. The broader semiconductor market also struggled on Tuesday, with the PHLX Semiconductor Index, HSOX, dropping 4.4%, significantly underperforming the S&P 500, LGSPC, which was down 0.5% by midday.